What's up guys, welcome back to the channel. This is Timmy Solomon Wisdom aka Born to Trade, and in today's lesson we're going to talk about ICT's Turtle Soup strategy. The Turtle Soup strategy is one of ICT's best concepts. This strategy is a very good strategy and it's very simple. Over the weeks I've seen this strategy present multiple results in the market, so this is why I'm here to teach you this strategy so you can take advantage of those results that it presents in the financial markets. All the examples I'm going to use for this lesson are recent price actions, probably from last week, or I might decide to go back in time, maybe last 2 weeks. So these are recent price actions in the market, so it's nice if I should teach you this strategy if you don't know about it, so you take advantage of it and make money from the financial markets. You know, our aim in this channel is to make sure you're making money from the financial markets, and we are updating you with the strategies that are playing out in the financial market. So if this is what you're interested in, consider subscribing to this channel, and if you have interest in joining our Telegram community where we share updates from time to time, you can look to click the link in description and join us today. So let's jump straight into the strategy, ICT's Turtle Soup strategy. So the Turtle Soup strategy is simply buying beneath old lows and selling above old highs. Now, why do we look to buy below old lows and sell above old highs? We're looking to do this because the Turtle Soup traders, that is, these are breakout traders from the olden days, they look to trade when price breaks above these old highs and old lows. But in this strategy, what we usually see is that price will always sweep the liquidity above these old highs and old lows and reverse to the downside or to the upside, depending. Personally, if I'm to name this strategy, I'm just going to name it very simple. I'm going to call it the liquidity sweep strategy. That's what I'm going to call it. But you all know ICT, because it's the Turtle Soup strategy, and it's actually a very good strategy. So the Turtle Soup has different patterns, but I'm going to explain these two major patterns we have on my screen right now. This first pattern we have right here, this is a reversal pattern. The reversal pattern is actually one of the best, and we equally have the continuation pattern. Now, talking about these two patterns we have right here, the reversal pattern we have over here, the reversal pattern gives good risk to reward. Why does it give a good risk to reward? You know, price has been in a specific trend and now you're catching the reversal, and you know what it means when you try to trade reversal. It means you're going to catch the beginning of a new trend. So when you're able to catch the beginning of a new trend, it means you're going to bargain more pips from the market. And we have this continuation. The continuation itself presents good results in the market. And another good thing about continuation pattern is that the continuation pattern gives more confluence. Why did I say it gives more confluence? You're actually trading in line with the trend. You're not looking to catch any reversal. So the reversal pattern is kind of more risky because you might lose some couple of trades before making good money, and when you make the money, I'm very sure it's going to cover for your losses because it's a reversal. But the continuation seems to present more setups that has lower risk of failing. Okay, so let's talk about these patterns right here. Now, firstly, what you need to do is to identify old highs or old lows. Now, in this case, what we're seeing is an accumulation. Price was trending to the upside. Now at this point, price starts to accumulate. Now at this point, it doesn't mean it always has to be an accumulation. It could be a single high and it could be equal highs, and if we see an accumulation this way, it makes more sense. Okay, now the breakout traders, who ICT calls the Turtle Soup traders, who look to trade the breakouts because the expectation is that price has been in this area of resistance, which means price is finding it hard to break above the resistance level, and the expectation is that price is going to break above this high, possibly retest the high, and they're going to trade the breakout to the upside. That's making them place their stop losses above the high. A lot of orders are placed above this high, which means a lot of money is resting above the high, and that means that's liquidity in the market. Having this liquidity in the market, then what is going to be our expectation? Our expectation is that we're going to wait for price to sweep these equal highs, or we can actually call it an old high. Now, when price takes the liquidity at this particular high, we're going to look to get our entry. Okay, at this particular point, this is where we're going to anticipate to get our entry because it means that price has swept the liquidity at this particular high. Okay, now if we are able to get an entry, we're going to look to trade to the opposite direction. This is a very simple strategy. I say this is a very simple strategy. You can actually call it a liquidity sweep strategy. Now we have other things that could serve as confluence. The confluence is if price is actually reacting from a key level. So if we see price sweep the liquidity above these highs, then mitigate or rebalances a key level, then it's a confluence that can actually help this strategy play out well. And what are some of these confluence? Firstly, it could be a fair value gap. Okay, if price trade into a key level like a fair value gap, it's a very good confluence. If price trades into a higher time frame point of interest, a higher time frame order block, a higher time frame supply level, in this particular case is a very good confluence. Or if price taps into area of liquidity, area that has a lot of liquidity, is actually a key level, and this makes this a high probability trading opportunity. Now, talking about the entry, I will explain some of the entries when I show you price chart examples, so you will understand better. Okay, now this is the second pattern we have right here, and this pattern is for a continuation pattern. From what you can see, price has been breaking multiple structures to the upside, which indicates that we are in an uptrend. Now, this particular area, what can we actually see? We see price starts to reverse to the downside, and you see we have this old low right here. So at this particular low, we have a lot of liquidity resting at the lows. And what's the expectation? Breakout traders will be expecting that price is going to sweep the liquidity, maybe a retest and a continuation to the downside. Now at this point, what we see price do is that price actually came, swept the liquidity, and at this point we see we have a very good order block right here. Price comes back, mitigates the order block, possibly give us an entry pattern right here, which we're going to get involved from this level, and then we look to trade to the upside. This is actually a very simple strategy, but I think I should use a price chart example to explain further so you will understand better. So this is going to be the first example. This is actually GBP card, though 30 minutes time frame, and this is the recent price action. This is on the 24th, that is this market close, yesterday's market close. Okay, so this is one of those setups it presented. So let's try to break it down in a way you understand, and this particular one is for a reversal pattern. So what can we actually see from here? So from this particular area, what we can clearly see is that we have these old highs right here, and this is more like an equal highs. At first, price was building liquidity, then it sweep. This was a news event, swept the liquidity at this low, but after that, price continues to build liquidity at this particular area. So this is an old high, and it's known that liquidity rests above this particular high. Now, what is our expectation? Our expectation is that price is going to sweep the liquidity at this particular high, then we're going to anticipate the reversal to the downside. While the breakout traders is still anticipating a continuation to the upside. So we gas price forward to see how this reacts. Now at this point, you see price sweeps the liquidity above this particular high. Now that price swept the liquidity at this high, what is our expectation? Our expectation is we're going to expect a bearish intention. For us to get involved in these markets, I don't think we should just trade blindly or trying to enter off the sweep of liquidity. You need to see some kind of confirmation before you enter this trade. And what are some of the confirmations? You might try to identify change in state of delivery, or you can actually look for your market structure shift and look to trade from a fair value gap or an order block. So let's look for a bearish intention, because see price is still bullish at this point. We have to identify a bearish intention before we look to get involved in this trade. And you see price is still trending to the upside, so I don't think there is any reason to look to trade the reversal for now. And this is the first bearish intention we identifying at this particular area. You see sellers have stepped into the market, and you see that first candle pullback. So this is where you're going to pick interest, and what you're going to do is you're going to mark the order block, because this indicates a change in state of delivery. Then you're going to mark the order block, and this is going to be your entry. Once price retests this particular level, then you're going to look to trade to the downside. And where could be your target? We have areas which you could look to target right here. You could look to target this particular low, and we equally have these lows right here, which are good lows, which could be your target, right? So these are areas which you could actually look to target. So all you have to do is to wait for the retest of this particular level, and you look to trade to the downside. And you see price comes back, retest the level immediately, and what are you expecting? A continuation to the downside. And all we see right here is that price was able to come back to mitigate the order block. So if you actually drop to the lower time frame, so let's try to drop to the 5 minutes time frame. So this is it right here. If you actually looked for a market structure shift, if you paid attention to using a market structure shift, you're going to see that price shifted in structure from this particular area after we had this low being taken. These are market structure shift right here, and you see price came back to mitigate the order block we have at this particular highs. You see we had a mitigation right there, and that could be your entry. So let's go back to the time frame we are looking at. So the most important thing right here is that you got your entry, which I explained that you could actually pay attention to the change in state of delivery, where price came back to retest this particular level, and now we're going to anticipate the drop down to the downside, and we already have the areas which we're looking to target. And you see how price reacts massively to the downside. And at first, when price took the liquidity at this particular low, which I said is a very good low, you see we had some reaction to the upside. And let's play price forward and see. And finally price was able to get to this particular low and mitigate this particular low. So this is it about this strategy. It's actually a very good strategy. I think we still have another example on this particular pair. I think we should take price back to see the second example on this particular pair. So here is the second example, still on this particular one, occurred on Thursday. The one I showed you was just yesterday, and this was the day before yesterday, still on the same pair. Now this particular one is for the continuation pattern, which I explained. Now at this point, all we see is we have price taking this particular high. Price took the liquidity at this high. A lot of people might actually call it a break of structure depending, and now we're seeing some accumulation right here. So let's press price forward and see, and you can still agree with me that this is an old high, or will I say relative equal highs. So let's see. And from what you can clearly see here, price sweeps the liquidity above this particular high, and this is the same strategy. This is another reversal pattern, but I was actually paying attention to the continuation pattern to the upside. So you see price sweeps the liquidity above this high, trapping the breakout traders, and see how it reacts back into this range. But what I was actually paying attention was this particular low we have right here. So I think I should delete this and explain what I was looking at. You see this particular low right here. So this is an old low, and we are anticipating a possible continuation to the upside. And if you look right here, you see price also coming back to rebalance inefficiency, and you see price already took the old low and it's rebalancing an inefficiency. If you look down here, you probably have another inefficiency which price has just rebalanced. So now price sweeps this liquidity. What are we going to anticipate? We're going to anticipate the reversal to the upside. And you see this is where we start seeing bullish intention, and you see this particular candle was not able to close above this particular candle that swept liquidity. So we can actually drop to the 5 minutes time frame to look for lower time frame confirmations, more like a market structure shift. So this is it right here, and from what you can clearly see, if you look from the lower time frame, you see this was where price rebalance the inefficiency right here. And if you're paying attention to the change in state of delivery, you see we have this bullish candle that was able to engulf the bearish candle, and if you try to mark that, you see we got the retest of that, and now price is reacting to the upside. And if you actually looking for another entry, if you are not able to get involved from that particular entry, you can look to enter off this fair value gap. Okay, you can look to enter off this fair value gap because you can clearly see that price was able to break above this particular high, which indicates that the bulls are already in the market. So let's press price forward and see. And from what I can see from here, price was not able to get to this particular fair value gap right here, but instead it rebalanced the fair value gap we had at the particular high, and you see how price has just moved away from this particular area. See this fair value gap at this particular area was rebalanced, and price moved away from that particular area. So this is it about this particular strategy. This is it, and I hope this makes sense to you. I hope you understand it. I think maybe I should show you another reversal pattern back to the 30 minutes time frame. So let me try to play price forward to see. And you see price was able to react from that area to take the external range liquidity. So if you drop to the 5 minute time frame and identify just change in state of delivery, you would have gotten a good entry and the reaction to the upside. So I think I should show you one more example before I end this particular lesson. So this is the recent price action on Nasdaq. This is the recent price action this is on 24th, and from what you can clearly see from here, we had a reversal pattern very similar to the one we just explained. Price took the liquidity at the high. After it swept the liquidity, we have the reaction to the downside right here. And if you're looking to enter off a market structure shift and price rebalancing and efficiency, you see you got a very good entry, and you see how price reacted to the downside. This is for a reversal pattern. And if you're looking for a continuation pattern, all you can see is that price came back when it was reacting to the downside, and it swept the liquidity at these old lows. Okay, you see how price took the liquidity at this particular lows, a lot of liquidity, money resting at this particular lows. And finally what we see is price coming back to mitigate an order block which has few inefficiency that needs to be rebalanced. You see price mitigates the order block. You see the mitigation right here, and you see how price is already reacting to the upside, right? You see how price is reacting to the upside. And if you marked the change in state of delivery, you see how price came back to retest this particular level. You see at first price react to the upside, retest, come back for another retest, then you see how price react to the upside. So this is a very simple strategy, and it has offered good setups in the market. All I want you to do right now is to go to your price chart and try to backtest this strategy. Okay, I hope you make the best trades, and once you start making money from this strategy, all I need from you is to send me your results on WhatsApp. For those who have access to my WhatsApp, you can actually send your results, and it's going to boost my mind to create more lessons like this. So thanks very much for watching this one. If you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade.